Hi guys, this is Richard from the Stable Center, and today I will be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. So, Chainlink has teamed up with UBS, a global banking giant managing over $5 trillion in assets, and DigiFT in Hong Kong to pilot a groundbreaking tokenized fund. The goal is to automate how investments are created, managed, and settled on the cryptocurrency blockchain, removing much of the manual work and inefficiencies in traditional finance. Investors can now place orders through smart contracts, and Chainlink's digital transfer agent will verify and record them on the blockchain, and UBS's tokenized product contracts will handle issuance and redemptions, aka creating and cashing out the funds in real time. If successful, this pilot could be a major milestone for regulated real world asset tokenization, showing how traditional finance and cryptocurrency blockchain can merge together to make markets faster, more transparent, and more efficient. In other news, Polymarket, the leading prediction market platform built on Polygon, has partnered with Chainlink to bring much faster, more accurate, and less subjective outcome resolution to its markets. Instead of relying on user voting or third-party arbitrators, Polymarket will now use Chainlink's oracles, especially data streams and automation, to automatically settle price prediction markets once their time ends, using verified time-stamped price feeds. This upgrade is live now for crypto price bets, and plans are in motion to expand into more kinds of prediction markets. It's a major step in making prediction markets fairer, more transparent, and less prone to manipulation and delay. Now, if we move over to DeFi Llama, Chainlink now controls about 62% of the total Oracle market share, and that percentage has climbed steadily towards the upside throughout 2025. What this means in plain terms is that more than half of all decentralized systems that rely on external data like price feeds and off-chain inputs depend on Chainlink's networks. When you combine that with the Polymarket partnership, where Chainlink's oracles now ensure faster, more reliable resolution of prediction markets, and the UBS DGFT tokenization pilot, it reinforces a pattern. Chainlink is not just making moves, it's also building the backbone of decentralized finance infrastructure. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like green and blue, represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. So in the last video, I pointed out the strong likelihood that Chainlink would see a pump this week. With Chainlink rallying over the past few days, Chainlink's risk level has risen to 0.06, which is still insignificant and very low. According to risk analysis, buying Chainlink today is still considered low risk, not financial advice. Okay, so let's take things one step further by adding the regression lines. So regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red peak regression line, indicating that Chainlink is overvalued. And the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. So today, let's tackle this idea that cryptocurrencies always crash in September. You have probably heard it all over social media and even from mainstream voices like Jim Cramer. But here's the reality. We are already 2 weeks into September, and most cryptocurrencies have rallied hard off their August lows. This is why you should trust your own analysis instead of listening to talking heads who don't even know you exist. Now, let's play devil's advocate for a second. Say the market does roll over after the upcoming Federal Reserve interest rate decision. What's the worst case scenario for Chainlink? So, for Chainlink, that would most likely mean another retest of the green bottom regression line. Let's zoom in. So another retest of the green bottom regression line would basically entail that Chainlink would basically retest $18 to $19. And honestly, that's still perfectly healthy within the bigger picture because my outlook for Chainlink in the long term has not changed. Chainlink is still right on track this cycle to smash new all-time highs. Even if altcoins stay sluggish and Chainlink only reaches the gray regression line in Q4 of 2025, you are still looking at a $100 Chainlink. But if history repeats itself and we make it back to the red peak regression line, we are potentially looking at a $300 Chainlink in Q4 of 2025. Either way, the setup looks explosive and bullish. The only question is whether Chainlink stops at $100 or rockets into the hundreds of dollars. Now, let's shift over to TradingView for some short-term analysis and do a quick recap. In the last video, we talked about how Chainlink was setting up for a breakout to the upside following the breakout of the bullish falling wedge pattern. And sure enough, the Chainlink price did break out to the upside. Right now, price is still sandwiched between the white 1-to-1 trend-based fib extension support area and the 1 to 1.618 white trend-based resistance area. Additionally, you can see a golden cross has formed where the 50 daily moving average in orange has crossed above the 200 daily moving average in red. That's a classic bullish signal, and it confirms the bull market and the long-term uptrend is still very much intact. As I mentioned earlier, the absolute worst case scenario here is basically a retest of $18 to $19, which coincides with our white 1-to-1 trend-based fib extension support area. And even then, notice that the 200 daily moving average in red is climbing daily and currently sits at $16.41. That's important because it already caught the bottom of Chainlink's correction back in early August. That's why I'm not too worried about any kind of new bear market developing right now. The long-term uptrend is clearly still up. All right, now let's zoom into the 15-minute time frame for some shorter term analysis on Chainlink. In the last video, we looked at a potential Wyckoff accumulation setup, which suggested that Chainlink's correction was either over or very close to being over. We pointed out that Chainlink was likely to keep pushing higher after retesting the selling climax level at $22.28 as support for the price of Chainlink. Chainlink did end up holding the selling climax support level as support, and Chainlink this week rallied right into our Wyckoff resistance zone between $24.74 and $26.04. In my opinion, this means that Chainlink has entered the next phase of the accumulation where it needs to form what's called an LPS, aka last point of supply. The idea here is simple. During an LPS, market makers are scooping up whatever supply is left on the open market before the breakout to the upside. To keep this short-term trade setup valid, the LPS cannot break back below the test level at the selling climax around $22.88. The first real sign that Chainlink is ready to launch into new bull market highs will be a clean breakout above the final Wyckoff resistance level at $26.04. Once that happens, the path to much higher levels open up. Now, quick disclaimer here, short-term setups on the 15-minute chart are extremely unreliable, so always keep that in mind when looking at moves this small. Okay, now that we covered the short-term Wyckoff analysis, let's move on to the long-term Wyckoff analysis. So Chainlink is currently breaking out of a multi-year Wyckoff accumulation pattern and has completed its third LPS, which once again stands for last point of supply. Like I just said a few seconds ago, in an LPS, market makers accumulate whatever Chainlink supply is left on the market before the eventual breakout to the upside. As you can see on screen, the second LPS actually occurred in August of 2024 and bottomed inside our blue Fibonacci retracement support area, right in between our 0.618 and 0.786 Fibonacci levels. Fast forward to today, the third LPS also appears to have bottomed inside the blue Fibonacci retracement support area between, once again, the 0.618 and 0.786 Fibonacci retracement levels. Now, moving into price targets, the first bull market price target for Chainlink is at the 1.618 white Fibonacci retracement level, located at $59 per coin. The next potential price targets are the 1.236 to 1.382 Fibonacci levels, located between $92 and $131 per Chainlink token. If Chainlink blasts past those levels, the next potential price targets are the 1.618 to 1.786 Fibonacci retracement levels, located between $230 and $342. And the final bull market price targets for Chainlink are the 2.272 to 2.414 Fibonacci retracement levels, located anywhere between $1,087 to $1,524 per Chainlink token. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.